What's going on, everybody? Josh with AlphaDayTrading.com, and today we're going to dive into a live trade recap. I'm going to walk you guys through step by step on why I took my trades, what I took in the first place, my entries, my exits, how I really mapped everything out, what I saw, just so you guys can see what I'm seeing and why I'm trading what I'm trading, and ultimately how I was able to lock in money today, trading options, trading penny stocks on a small account, guys. So I hope you guys enjoy. Don't forget, do me a big favor, hit that thumbs up, thumbs down, leave a comment, subscribe to the channel, and most importantly, guys, you guys get updated on our lessons, our recaps, our morning watch list. Hit that little notification bell. And also a new feature, if you guys want our morning watch list, go ahead and text. I think it's going to be somewhere here. Go ahead and text Alpha to that number, and you're going to get our morning watch list with all the hottest press releases, the top stocks. You're going to get pictures and snippets of the high of the day momentum scanners, pre-market movers, guys. All this absolutely free. So again, do me one solid favor. Hit that like button, thumbs up, thumbs down, smash the subscribe button, hit that notification bell. Most importantly, text Alpha to that number. Again, it's going to be somewhere edited over here. And I'll send you guys that morning newsletter every single morning, absolutely free. But let's not waste any more time. Let's go ahead and dive into today's trade recap. So while we're waiting for guys to give some comments on, any kind of lesson ideas, let's go ahead and talk about a couple of these trades, right? Since we're already on ANVS, let's talk about this trade here and why I'm down $73 on the day over on ANVS, right? Well, you're red on the day? Hey, could have been a 10 times worse loss. It could have been a $300-400 loss based on the share size that I had, right? I had about 500 shares on this stock, right around this 828 mark. Right now, if I still held the position, I was down 50 cents. That could easily be a $250 loss, $300 loss on ANVS. So how come it's only a $73 loss, Josh? Because I implemented proper risk management, right? We saw the stock moving on up into the nines, pushing into the 40s. How come we weren't buying there, right? Well, because we know we're going to have resistance up towards around this 969. Why 969? Well, this was pre-market highs. We opened up, we pushed right towards that 969. So when we see the stock finally giving it a go, showing that it has some strength, and we notice it right here at 915, why are we not buying here at 915, 930, 940? Because we have overhead resistance right at 969. Now, then some traders ask, okay, how come you didn't buy the break over pre-market highs? Well, what's right above 969? $10. What's $10? That's a tough resistance line for penny stocks. How come you're not buying the break over 10? Because I'm not the guinea pig. Have we seen a clean, solid breakout today and hold its gains yet? No. What have we noticed in the market, guys? Stocks push on up, giving everything on back. Stocks attempting to push up, giving everything back. Right? So we've seen this stock after stock after stock. Looks like it's going to give it a go, starts giving everything back. So that is exactly why we did not chase ANVS for a breakout. A lot of new traders probably got crushed in this because they're like, oh, I'm going to buy the break over pre-market highs. Oh, I'm going to buy the $10 break. I'm in at 1016, 1018, 1025. It's going to go to 11. Oh my God. Boom, dump. Every single stock's done the same thing. Those are market conditions, right? We have to understand the market that we're in. Every single stock pushes, gives it back, pushes, gives it back. I'm going to go ahead and go with ANVS, attempting to push and giving it all back. If I'm wrong, that's cool. I'll wait for a good opportunity. I'll wait for a good setup. But I'm not going to be the guinea pig and hope that this is the stock that actually breaks out today when we haven't seen a freaking breakout yet. So it's all about being disciplined, guys, and being patient. So we're not trading up here in the 930s because we know we have a lot of overhead resistance. We're not buying breakouts because we're not in a hot market to where stocks are breaking out left and right every single day. What are we doing? We're buying the dips. Still, we're buying off support and we're selling up near resistance. So when we see this stock pushing on up, pushing on up, pushing on up, whoa, what's going on? Come on, come on, come on. There we go. Thanks, TD. We see the stock pushing on up, and we're looking for our best entry. We're going to go ahead and scroll back and look for good areas of support and resistance to where we can get a nice low risk dip buy entry. So number one, I see our pre-market spiking high at 830, right? We pull back, got a nice push. Where was our bounce play at? Where did the stock come down and hold support before moving higher? Previous resistance, 831. All right, so we're just simply waiting. We're being patient. We're not chasing the stock. We're not stupid. We're not trying to, we know what we're doing, right? We're disciplined. We're patient, right? Everybody else that wanted to chase this, think it's going to the moon, had the urge to trade because, they might miss out on 10 cents. They lost out on a lot more than a 10-cent profit. So we're waiting. We see we have 830 support, right? Resistance support. I'm waiting for 830. I take an entry, right? I take an entry at 830, looking for the push back up into the 9s, right? Stock's looking pretty weak. It's just consolidating right there around that 830 mark. My stops are still at $8, right? When I buy at 830, my stops are about 25 to 30 cents, and I'm looking for a nice 60-cent move. So my risk reward right there off the bat is a minimum of 2 to 1. So before this stock even comes down to this area, I know where I want to buy, I know where I want to place my stops, and I know where I want to take profit, right? Why do I want to take profit right at that 885 to 890? Well, this is where we came down and pushed off of at the start of the day. There was a little bit of resistance here. There was some support here. Resistance, support. Look at this. After that push above 885, where we pull back to and hold. That area of resistance support. So I know that right off the bat, before the stock even comes down to these levels, I know that I have potential to make 60 cents. I know that a good stop loss is putting my stops below $8 whole support. So I'm already prepared. I know how many shares I want to take based on that 30-cent loss, how much that is from a loss standpoint, how much I'm going to make, again, my share size, my risk management. I'm prepared. I'm ready. I'm good to go, right? The stock doesn't come down to 830. I make an entry, then say, shit, where am I going to stop out at? What's my profit target? No, I'm smart. I do my due diligence and I plan ahead of time to where I'm prepared. And that's how we stay consistently profitable in the stock market. Doing this without fail every single day, every single trade. So I'm just waiting, right? Take the entry. Never stopped out, consolidating. Starting to get a little weak here. I'm kind of hesitant, right? I'm very hesitant. We never closed below 8. I took an average off 8. So I brought my average down. So I had, 250 shares here at 830. I took another average. It was probably around 810. So it brought my average to the low 820s, right? So my average was around 820 to 824, I believe, on 500 shares. I'm like, okay, if we can get back above this 830 and hold, I'm going to take another average, right? I'm going to take another one. So I want to average in for the push, right? Because what would this be? Holding area of support, flush out the weak traders, push back above, regain, retest for the push. So I'm buying here another average, and I'm looking for the 850 push. It looks really, really weak. I stop out at break even. How come I still don't hold it? Because just it's an instinct thing. The more time you're in the market, you just kind of know when you're looking at the level 2 and you have a sense of the price action and you have a sense of the chart setup and what it should do 9 times out of 10. This stock should have, again, if this was the flush, this was washing out the weak traders just to regain support to push higher. We needed to see this continue up over 850 immediately towards that 890 area. The fact that we weren't getting over 850 and we had more selling than buying indicated that the sellers are dominating the buyers. We're not going to get the push. I'm not going to hold it to 8 because the odds of me holding it to 8, and by the time I actually stop out, I'm getting filled at like 790, 780. I'm not willing to risk $200-300. So my goal now is to stop out at break even, right? So by the time I stopped out on my total position, I lost a whole whopping $73, right? Which could have been, look at that, right here at 8. You're looking at that level 2. You're looking at the level 2. It's holding 8, and out of nowhere, boom, someone comes in and market orders out, and it flushes it all the way down to 760, 770. So by the time you market order out, you're already down an extra 30 cents than where you wanted to be on 500 shares. That's a $300 loss. That's a $200 loss, whatever it is. So a $73 loss could have easily been $200, $300, $400. So again, risk management, guys. It's all about risk management. Knowing where you want to get in, where you want to get out, where your stop losses are, reasonings behind the trade, 3 separate reasons to make the trade, being patient, not buying the breakouts, waiting for the best low risk entries. That's how you stay consistently profitable in the stock market. Right there. It's all about just being disciplined and honoring your plan and having a plan to honor in the first place. What's the saying, guys? Plan your trade, trade your plan. You do that without fail, you're always going to be profitable, right? We have even you can have a 50% win rate in the stock market. You could have a 50% win rate in the stock market. And if you do this without fail every single time, you're going to be profitable at the end of the day. It's just statistically, you're going to be profitable. If you always implement a 2-to-1 setup, you have a 50% win rate, which means you're right. For every 2 trades, you're only making 1 right, the other one's wrong. But if you have a 2-to-1 setup, you're always going to be profitable, no matter what, right? So that was my loss on ANVS. That was the reasonings behind the trade, why we didn't chase it, why we bought where we did, why the stops were the stops in the first place and the profit targets. Clean trade. Really clean setup, guys. I mean, there was nothing wrong with the execution. This was a flawless trade. The execution was on point. The timing was on point. The scaling in, scaling out, stopping out, everything was executed flawlessly, which resulted in a small $70 loss, right? Which is very easy to recover from. Super easy to recover from. Next trade, UMRX, right? So UMRX, the stock starts spiking on up. We still notice every other stock's fading on down. So yeah, the stock just hit $3.40, a new intraday high. How come we're not chasing this stock at $3.30, $3.40? Because we know that we're going to have $3.60 resistance. Why? Just go look at the daily chart, right? Just come over and look at your daily chart, guys. What's right around $3.60? Look at all that support and resistance on the daily chart. Look, right here. Back in, what, was this 2019? Yeah. Oh, that was 2018. Yeah, so like end of the year, 2018, bounced, $3.60. Beginning of the year, 2019, bounced, right? Got below it, resistance, resistance, resistance. Look at all this damn resistance here. Look at all that resistance. Support, resistance. We know $3.60 is going to be an area that traders are most likely going to be taking some profits if it ever gets there. So when we see the stock at $3.30 to $3.40, why do we not buy it? Because we have overhead resistance at $3.60. That would be stupid, right? To get in at $3.40, to have a reward of 20 cents, but our stops need to be all the way back down towards 3, at least 3, because it's just whole support, not even the best support, but still the nearest best support you have at that time. So you're risking 40 cents to make 20 cents. Does that make sense? No. So you know that right off the bat, you know that that risk reward just doesn't make sense. So you don't trade it. And then on top of that, you factor in every other stock has been pushing, then dumping on down. So again, I'm not buying the breakout. I'm buying the dip. So I know that we're going to have good support right around this 267. Why 267? We have some pre-market resistance right around 267. Our first 1 minute candle spiking high right here before the breakout was at 267. Scrolling back, scrolling back, scrolling back. A little bit of resistance and support here in post-market right around 267. The best area is our 2 spiking highs from yesterday, right at 267. So I've already identified, hey, 267 is a good area to go long, right? 250 stops, right? I'm going to keep it tight. So I'm going to risk 17 cents, and off that 267, I'm looking for a push back up to 3, maybe even over 3, but I'm at least going to take some profit around $3, right? So I'm risking 16 cents to make 32 cents. Right off the bat, boom, minimum 2-to-1 risk reward. So I already know entries, stops, profit targets. I know my trade. I'm prepared. I'm ready to go. So when my entry presents itself, I'm good. Waiting, waiting, waiting. Got filled. Right? Just like that. Being patient. Got filled. Boom. Take profit. Boom. I'm out. It's that simple. Entries. I know my stop. Valid reasons for the stop. Valid reasons for the entries. Valid reasons for the profit target. 2-to-1 setup. I can easily, without any hesitation, make my trade, get out, stop out, and just be okay with it. I don't have any bad feeling. I don't have any hesitation to make the entry because I'm confident because I've done my due diligence. So that's how I was able to make $134 on UMRX, right? Nailed the entry, scaled out, never got stopped out, and I'm glad that I went ahead and took my profits when I did because the stock is just going to shit. Well, it's trying to push back up now a little bit, but again, we don't bag hold it forever. We know where our exits are, and we're going to not be greedy. That's another thing too, guys. We got to talk about greed. Some traders starting to see this pushing over 3. Oh my gosh, it's going to go over 3. That's way past my target. I'm going to get back to 340. I'm going to make so much money. Oh, it's back below 3. I'm going to give it another chance. Oh my gosh, it's going to go 3. Oh no. Okay. Oh, maybe it's going to push 3. All the way back down to 276. Now you're only up 5 cents a share. You're like, okay, fuck. I was up $134. I got greedy. Now I'm back to break even. All right, let's trade this right next time. Next time we come up to 3, I'm gonna take my profit. Ah, shit, we're below the entry. It's not good. I'm gonna go ahead and stop out. Oh man, it went back to 3. I should have just taken my profit in the first place. Damn, why was I greedy? So we gotta talk about greed too, guys. It's so easy to get caught up in greediness and not taking money when you have it. That's another reason you're not going to be successful as a trader is if you're too greedy. When you have money on the table, when your plan has been hit, you take money, put it in your pocket, walk away. That's the whole point of us being here is to get paid. You build your plan, you execute it to a T, you're not greedy, you don't FOMO shit and buy at the tops. You're smart. You're smarter than 95% of the other people that trade, right? You're smarter than them because you know what it takes to be successful. What we just talked about is 90% of your success as a trader. Discipline, patience, having plans, being a master at, risk management, not being greedy, taking profit when it's on the table, stopping out when you say you're going to stop out. If you can master those things right there, fuck the technicals. Fuck trend lines and this and this and that, right? That'll all come. You'll learn that. The hardest part is everything we just talked about. Once you master that, then you start learning setups, right? Finding support and resistance, buying red to green moves, right? You start learning the technical side of things. You don't learn the technicals first because you're going to lose. You master this first, get it under control, and then learn the technicals, and your trading career is going to excel far faster and more substantial than you could ever imagine. It's not going to take you 5 years like it took me, right? It's going to take you like 6 months to a year. You're not going to have 50 grand in blown up accounts. You might lose a couple grand, but that's, your tuition in a sense. That's your tuition to learn. So with that being said, guys, learn those things first, right? And just like that, all live, UMRX, entries, exits, showing you guys real time what you have to do, right? You have to be disciplined. You have to cut your losses. And we did that. Yeah, we're red on the day, but we're only an hour and a half in the market. Not even an hour and a half in the market yet. It's 10:51. We're going to wait for an 11 o'clock possible rip, right? We have power hour. We've seen a lot of stocks move up over lunch the last couple weeks. So the day is not over yet. If an opportunity doesn't present itself, I'm down $19. Woo. Really makes a dent into my $1,000 trade yesterday. My $1,000 day. Really makes a big dent. No, it doesn't. Small red days, you're going to have red days. You got to manage your risks so they're small. So that was UMRX, guys. Again, reasonings behind the trade, entries, exits, all that good stuff, plus a little pep talk for you guys. And then the other one was VIVE. All right, the other one was VIVE in pre-market. I know we talked a little bit about this today. So I'm just going to brush through this real quick. It was a good setup as well. Nice solid push on news, nice solid push on volume, lower float stock, pulling back, double bottomed at support. That support area happened to be past chart on the daily as well. We also had our 50% fib. I took a nice big boy position, 3,000 shares, not really. For an 80-cent stock, it's not that big. It's like $2,500. Was looking at this being the downtrend around that time. So I'm looking at that right there being the downtrend. So boom, downtrend, 50% fib retracement, past chart support resistance, broke above, came back down, retested that previous low as support, put in a nice W off the downtrend, off 50% fib. So many reasons to take the trade. 1, 2, 3, 4. My gosh, I took the trade. It was a nice setup. Stock started to push. Volume is moving in. Just couldn't get the volume behind it. Ended up coming down, stopping me out. I never took it all the way to my stop. I stopped out sooner than later because I just wasn't feeling the stock anymore, and I wasn't willing to risk another 5 cents. So I went ahead and stopped out, and I lost 80 bucks. So between my loss on VIVE, ANVS, and my win on UMRX, so right now, what's that win rate, right? I'm red on 2, and I'm green on 1. So what is that? That's 33%, right? So out of my 3 trades, I was right on 1. So I have a 33% win rate today. And you can see, this is a perfect testament. You can see that even with a 33% win rate, you can break even on the day, right? You don't have to be nasty red. It's all risk management, guys, right? Risk management, risk management, risk management. Being smart, being smart, being smart. And even with a very bad 33% win rate, you can still break even on the day if you trade your stocks right and you use your head. Common sense, guys. And that's what we teach. That's what we do. So guys, that's it. That's my nice little, fuck, that was a long recap. That was 20 minutes. That's actually not too long. 20-minute recap. Talked about 3 stocks, reasonings behind them.